So I know that Biden is excusing, these student loans and offering student loan forgiveness, but the reality is that most people, not most, some people won't even be able to qualify for some of the forgiveness. So I want to make sure that you understand how student loans are still going to impact your home buying process, whether that yours are forgiven or not. So the number one way that it's going to impact your home buying process is how much you actually qualify for. So that's number one. Because you have debt, there's a such thing as a debt to income ratio that lenders use to determine how much of your debt to how much of your income is realistic for you. So they have different caps on this. I have a full video on how to calculate your debt to income ratio. I'll include the link in the description. But if you have a high amount of debt and a low income, or a high amount of debt and a high income, and the two don't cancel each other out, that's going to impact you in the future. And it's going to impact how much they approve you for based on whoever else you owe money to. Like, that's just, there's just no way around it. You could be making buku money, but if you have buku debt, it's not going to cancel. It's not going to cancel. I'm getting tongue twisted. It's not going to cancel each other out. That's what I'm trying to say. The second way that it's going to impact you is the programs that you qualify for. So a lot of these programs, that offer grants, down payment assistance, things like that, they want you to have a certain debt to income ratio. And if you don't have that, then essentially you can't qualify to get, the $10,000 towards closing costs, down payment assistance. And that's what you want. You want to minimize how much money is coming out of your pocket when it comes to home buying, because you're going to need that money for other things. So there are lots of stipulations, around your credit score. And we know that your debt directly impacts your credit. So that impacts your debt to income ratio. It just becomes a trickle down effect. And I don't want that to impact you as you move through the home buying process. But you want to get as much money from these programs as possible. Take it from me. I got $8,000 in seller credits. I technically didn't qualify for the down payment assistance program that I wanted to go with because of my income, but that could potentially be your scenario. So do what you need to do to qualify for these places is all I'm trying to say, as much as possible. Third is your interest rate. So your interest rate is exactly how it sounds. We have an interest rate on our cars, we have an interest rate on our student loans, and the higher that is, the higher your monthly payment can be. So if your interest rate is 7% versus 3%, guess what you're going to be spending more on? The 7% route, because 7%, interest rate on your loan is expensive. You're paying the mortgage plus 7%, plus your taxes, plus your insurance. That's going to be expensive versus someone who has pretty good debt, pretty good credit, and was able to get a 3% interest rate. You want to get the lower interest rate and get an interest rate that is low as possible, and your debt directly impacts that, amongst other things, your credit and just your overall financial situation. And I have a whole video on how your finances impact your home buying journey. I'll put that in the description as well, but that's something people don't think about. I want people to understand that there is no way for you to out-earn your debt. I tried it. I don't know if you've watched my former videos, but I tried to purchase my first home, and that's when I actually had the debt, and my debt to income ratio was so high, despite how much money I was making on my job, that I was limited with how many homes I could actually go see, because once they give you that pre-approval, that's a cap. You can't go see a home for $400,000 if you're only approved for $300,000. So I kept hitting a brick wall. And my agent and my lender essentially set me down and was like, hey girl, it might be better for you to just take some time to pay off some debt, because that can allow me to pre-approve you later for more money at a better favorable rate. That way you have access to more homes to consider. So I took that and ran with it. I paid off all of my student loan debt, and I had about $80,000 in student loan debt, and then I had around $10,000. Did I have 10,000? I think I had around 5,000 left on my car note, because I was actively overpaying on that because I wanted to get rid of it. And I took almost 2 years to just pay everything off. So obviously the second time around, I'm in my home. I got pre-approved for much more. I got a great rate. I got seller credits, but I had to do the work because I wanted the best scenario for me. I didn't want to have to take on this new home loan that's costing me $2,500 when I'm used to rent that's around $1,300. Like, that's not realistic. I wanted it to be realistic. And once that rate is locked in, it's locked in. It's a fixed rate, which means it never changes unless you refinance, you know, and it's fixed for 30 years, 15 years, whatever option you choose. So I wanted to tell you that because it's important. People don't understand how it can impact your home buying journey, and that's how it impacted mine. So now I'm thankful for that because I'm in a new construction home. I don't have any issues. I got seller credits. My interest rate is great. Like, I'm so glad I bought when I did, but I'm so glad that I did the work prior to buying so that I position myself in the best situation and I qualify for as many opportunities to get support as possible. So just to recap, how student loans impacted my home buying journey and how it can potentially impact yours. Number one, it impacted how many homes I can qualify for, which means how much they pre-approve me for. Like, they'll give you a letter and say, okay, you're pre-approved for $300,000. That means I can only go see homes up to $300,000. And you don't want to go and find a home at $300,000 because you're going to have other things to pay for. So you want to be aiming for something around $250,000, and that can limit you as these home prices continue to go up. 2 is your debt to income ratio. So this is something that lenders give. It's a percentage-based number that they assign you based on how much debt you have compared to your income. And you don't want that number to be high. You want it to be as low as possible. And again, I have a whole video on that. I'll link it in the description. 3rd is the programs that are available to you. So you want to get assistance when it comes to your closing costs and your down payment. And that's the beauty of first-time home ownership, is that there's programs by city, state, county, and the country. So like, comment below if you need examples of some programs that I've considered, or if you need help on like how to find these programs. I'm happy to help you with that. But you want to get as much support, as much moolah as possible so that you're not coming out of pocket. Number 4 is your interest rate. Now, your debt and your student loans aren't the only thing that impacts your interest rate. Like, granted, it's the market, it's your credit score, it's your overall financial profile. But you want to make sure that you're in a position and you're positioning yourself to get the most favorable rate as possible in the market right now. And it's all based on your finances. So hopefully this was helpful. Please comment below if you have any questions around student loans or how I pay mine off, my strategy behind that. And I'm happy to support you. But please do not, just pay some off, okay? Like, if you need resources, if you need more tips on like how to prepare yourself for home ownership, this is my 100-page workbook for first-time home buyers. I break down my strategies and I break down everything that I did, as well as some industry knowledge that can help you walk into this purchase and confidently make it happen. So thank you for watching, and I will see you in the next video.